FRK311 Module Test 1 2018, question 1C this time. So we are continuing where we left off. Now, question 1C, what did that say? The question said, and please read this carefully, present the above information in the statement of financial position of NTC Limited. The statement of financial position of NTC Limited. Many students forgot to do that. So let's just underline that again. Right, please remember that is important. Then secondly, also prepare the net investment in finance lease note. That is the total note. In other words, that note will have two components at least. And that is, let us have a look at the question, or the answer rather. That is firstly, the reconciliation of net investment in finance lease, and secondly, the maturity analysis. You have to do both of them. And if that is not enough, part E of the question actually led you on to know that you had to do that maturity analysis as well. Many students forgot the maturity analysis or did not do it, and then they lost marks. So, what does this question want us? Let's start off with a statement of financial position. All you had to do was, for JAM marks, you get all of these items. These, of course, had to be together, and had to be together, so that you can. I wanted to see what you want, where you put each item, and please do not put deferred tax under current liabilities. It is a non-current liability. You lost marks there where you could have earned very, very easy marks. Now, once you've calculated the net investment in a finance lease, what do you want to achieve? You want to go to the table and say, what is the outstanding amount at the end of the year? So we had a look at the end of the year. We are working with that period. So outstanding at the end of the year is 1,307,019. That amount is your balance on your lease debtor. But what will happen in the next year? In the next year, you are going to repay that capital portion there. As you can see, that is the next year. So you're going to repay that capital portion, and that will be your short-term portion. So your long-term portion will be that amount, the 1,097,000. That will be your long-term portion. And that's all you have to do in this calculation. So let's go back to that. There you are. There's the 1,097,097 under the finance lease. So that is your long-term portion. Then the short-term portion was that one there, which I just showed you on the amortization table, and that was under current assets finance lease debtor. I was not too strict in this marking with the names. Some said here gross investment. I did accept that, but you must remember, you must give your correct notations there. The second part of the question, you had to calculate or give us the notes, and there's the full notes. Firstly, the reconciliation. What does that say? It just says opening balance minus capital paid gives me closing balance. So therefore, again, the closing balance is that amount there, which we just saw on the table, on the previous table. So when we go back to that table, you will find that on this table, there is your balance at the end of the year. What did I start off with? I started off with that 1,495,000. Just remember, it was during the year. Although on the first day, it was during the year that you received it. It was not an opening balance. So it was a new finance lease entered to during the year. You repaid that capital, and that then gives you this balance that you have there. So that will then be your balance at year end. So for that reason, if you go back to that calculation, you will find that in this case, there's the opening balance, not opening balance, the new finance lease entered into during the year, the 1,495,000, and then there's the capital repayment, which is the 187, ending up with that figure that you find in your table. Now to go and calculate, then that is the answer. The next one that you had to do was the maturity analysis, which quite a few students didn't give and didn't understand. The marks, as you can see there, was allocated layout for what you've done here. So please make sure that those are correct. All of this is taken from the table, amortization table. If you look at those items there, they are the single items on your amortization table. If you look at, and that is effectively, the amount that you see here is effectively your gross amount, which is still the installments to be paid in the future. And this amount that you find there is your unearned finance income relating to that. Now, how do I get unearned finance income? That's easy. I take those amounts, which is my installments, which will still be paid in the future, the next 5 years, and then I deduct from that amount, I deduct this capital, and it will give me the 470,000. Or I can go and do the calculation, which is those there. You can do it yourself. Whichever way you want to get to, fine, as long as you get to understand how the concept works and get to that same answer. Now that was part C of this question. Next, in the next video, we will do part D as a separate part, because that is where you now have to recalculate the implicit interest.